Hello, everyone, and welcome to another Q&A with Chug. Each week, we cover pressing topics that matter to you and your business. I'm Arianna Gonzalez from Chug, attorneys and CPAs joining in from our San Diego office. Please join me in welcoming accountants Nikul and Jaykumar Patel from our Atlanta, Georgia office. Hi there, Nikul and Jay, and welcome. For today's topic, we will be answering all your pressing questions on taxability and reporting requirements for foreign mutual funds. Just a quick disclaimer before we get started, this conversation is for informational purposes only. It does not create an accountant-client relationship, so please email us your questions at info@chug.com, and we'd love to help you out. Let's get right into it. Can one of you tell me what is a foreign mutual fund?
Foreign mutual funds are those mutual funds which are incorporated outside United States. So any mutual fund company which is incorporated outside United States, they all are foreign mutual funds.
Are foreign mutual funds taxable in the same way as domestic mutual funds?
No, they are not taxable the same way as a domestic mutual fund, but it is taxable in US for all US tax residents. Generally, for foreign mutual funds are called passive foreign investment company, termed as PFIC.
What is PFIC? Can you share that with us?
So PFIC stands for Passive Foreign Investment Company. Under US tax law, any pooled investment that is registered outside of United States would qualify as a passive foreign investment company, including multiple types of funds, investment trust, or certain foreign pension funds. PFICs are taxed through much more complex way than domestic foreign mutual funds. PFICs are simply foreign companies that either earn more than 75% of their income from the passive sources, like interest or dividend income or capital gain or rental incomes, or have more than 50% of their assets held for production of the foreign incomes. So PFICs are foreign, again, like a passive foreign investment company.
So how are foreign mutuals taxed in the United States? Do one of you have information on that?
So foreign mutual funds are taxed in three different ways. One is excess distribution, another is mark to market, the third one is qualified electing fund, which is also called QEF. So the way excess distribution works is the excess, if there is, you are only taxed on the realized gain on sale or disposition of any stock holding, where mark to market is is something which you are taxed on an annual or yearly basis. At the end of the year, the stock you hold is treated like you sold and repurchased at its fair market value on last business day. For with mark to market, you the gain is determined as an ordinary gain and loss. Something to note is that if you want to go this route, you need to make this election in first year. If you don't, your PFIC will default to being taxed as excess distribution. There is another way which is called qualified electing fund way, which is QEF. The way the QEF works, your PFIC is taxed on pro rata share of undistributed earnings for both ordinary income and long-term capital gain. However, this method is tough to tough to employ due to documentation requirement associated with making the election. More importantly, PFIC is extremely lengthy compared to capital gain income, as any income from PFIC is counted as other income. Furthermore, capital losses on PFIC can only offset other investment in limited circumstances, as it cannot offset gains on a different PFIC.
That's great information, Nicole. So this can be taxed in three different ways. So does PFIC include US mutual funds that invest in foreign stocks? Does that apply here?
No, Ariana. US mutual funds are called domestic mutual funds and not considered as a PFIC. even though they invest into the foreign companies' stocks.
That's really great info, Jay. So what are my reporting requirements if I have invested in a foreign mutual fund, for example?
So if you are invested in foreign mutual fund, basically you have more balance in a foreign fund, which is like a cash balance. So that is the reason why you are supposed to report FBAR form 8938, which depends on the total amount of total value. And then for mutual fund you have to report 8621, which also depends on how much value you have in a foreign mutual fund. And uh, FBAR and 8938 is relatively easy compared to 8621 because PFIC is a lot more complex and detailed.
So what are the tax implications of investing in foreign mutual funds? Can you share some insight on that with us?
So foreign mutual funds are taxed as a ordinary income rather than a capital gain income. Most importantly, they are taxed on unrealized gain. So even though you don't actually sell that mutual fund, whatever is your value addition as on 31st December, that addition needs to be taxed as other income on your US tax return. So it's called like a unrealized gain on which you have to pay the tax as other income on your US tax returns.
Understood. So for everyone watching this, if you have further questions on this, please send us an email at info@chug anytime. We'd be happy to help you out. So can one of you tell me, how do I report income from foreign mutual funds on my tax return? What does that look like?
So just like Jai mentioned, most foreign mutual funds are reported on PFIC, and then whatever the income or loss is calculated of the outside of the form, and it's mostly reported on as other income on tax return, which is not subject to self-employment tax.
Wow, that's really good to know. So what forms or documents do I need to file for reporting foreign mutual funds? Do we have any insight on this?
Yes, so for reporting of the foreign mutual fund, we need to check the form 8621, which is written by the shareholder of passive foreign investment company or a qualified electing fund. Another form which is required is FBAR, like your foreign bank account reports. And the third one is 8938, which is for the FATCA reporting form. Again, we have to check like whether you qualify to get the exemption for filing of any of this tax form or not. But these three are the basic forms which are required for reporting of this foreign mutual funds.
Understood. So there are 3 forms currently that we need to take a look at for this. That's really good to know. I appreciate you sharing that with us. So do I need to pay taxes in the country where the foreign mutual fund is held?
Yes, you have to pay taxes in foreign country where the foreign mutual fund is held. It depends on country's tax rules. Uh, you can pay taxes in a foreign country, but you can also get tax credit if you have sold the fund in a foreign country in US as well, depending on the tax treaty between US and the other country.
Wow, that's really good to know. So we can claim tax credit in certain circumstances. That's helpful. So do I also need to pay taxes on reinvested dividends or distributions from foreign mutual funds? Does that apply here?
Yes, you have to pay the taxes on reinvested dividends or distributions from foreign mutual funds, along with unrealized and realized capital gain, which is considered as a other income actually.
Got it. So how do I determine US dollar value of my investments in foreign mutual funds? Is there a tool or something to help us with this?
So there are a few ways determining the exchange rate for converting foreign currency values. One way is to get the value from exchange rate from IRS website. Another way is to get the rate based on the year end tax exchange rate.
Understood. So we can use the IRS website to get an exchange rate, or we can just calculate the rate based on the year-end exchange rate. That's really good to know. So what about dividends? Are dividends from foreign mutual funds subject to withholding taxes as well?
It depends on the tax regulation of that foreign country, like whether to withhold that tax or not. Again, it's country to country, whether that country's tax law required any withholding or not, right? So yes, of course, if that country's tax law required any withholding, then of course withholding is required on the dividend. Yep.
Really good to know. Let's talk about actively managed and passively managed foreign mutual funds. Are there any differences in tax treatment between actively managed and passively managed foreign mutual funds?
No, there is no major difference whether the fund is no, there is no difference whether the fund is actively managed or passively managed. There won't be any tax differences for that.
Wonderful. Thank you so much for that helpful information. That is all we have time for today. So this does bring us to the end of our conversation. Thank you so much, everyone, for joining us today. A special thank you to you, Nikul and Jaykumar, for spending your time and sharing your insights with us. To stay up to date, please subscribe and follow us on Facebook, LinkedIn, and YouTube. If you have any questions or suggestions, please send us an email anytime at info@chuk.com. Let us know what topic you want to see next. And make sure to join us back here next week for more pressing topics that truly matter to you and your business. Until next time, stay safe and take care, everyone. Thank you so much for joining us.